Real estate is not a get-rich-quick situation. Real estate is a long-term game. If you don't find a way to make money in your sleep, you'll work till you die. My goal is to help 1,000 people reach financial independence through real estate investing.
Greetings, wealth builders. Welcome to Get Diversified, your go-to podcast for all things real estate investments.
I'm Jacqueline.
Melvin Landry. We're thrilled to embark on this wealth building journey with you.
Imagine this. What if your investments not only secure your future, but also unlock a life of financial freedom? That's what we're diving into on this show. Apartment buildings, storage facilities, mobile home parks, the whole shebang.
But here's the kicker. It's not just about investing. It's about crafting a legacy, building memories with your loved ones, and seizing every moment. Time is the currency of life. And let's be real, none of us wants to waste.
We've got the insights, experience, and dash of excitement to spice up your investing game. Plus, we'll throw in some real-life stories that'll make you see the potential in every brick and mortar.
Subscribe, buckle up, and get ready to turn your investments into the ticket to financial freedom. Together, we're not just building wealth, we're building a community of savvy investors. Let's get diversified.
Good morning, everybody, and welcome to Get Diversified podcast. My name is Jacqueline Landry, and I am here with a very, very special guest, Trevor Thompson. Welcome to the show.
I'm excited to be here. Thanks for having me.
Fantastic. So Trevor is from Austin, Texas, and he is a guy that always has been interested in real estate, but he just didn't know how to start. So Trevor, tell us a little bit about, what sparked your interest in real estate. And let's just kind of start from there.
Sure. So I was always interested in real estate, but I never really did anything because I just didn't know how to do it. So I had friends that were doing real estate, different things. But to be honest, I was afraid of toilets, tenants, and trash. And even though I read Robert Kiyosaki's book, it was life altering. I really understood it. I felt like I still had to do all the work. And I always call it, I was afraid of toilets, tenants, and trash. And I just didn't want to get into the space. So I knew about it. I'd heard about it. And then I just decided, okay, I really need to educate myself how I can get into the space. So I started going to real estate webinar weekend conferences and learning. The first couple were, super fly-by-night guys. Didn't like them at all. And my third one was a local Texas group. I went to a commercial real estate because they did do single family, but that wasn't of interest to me. And to be honest, I originally thought retail. I like that, and I like different things. And then all of a sudden, they talked about this thing called syndication. And I went, hold on a minute. Where have you been my whole life? This is who I've been looking for. And the concept of you give your money to people who are experienced. They're buying a business that is backed by an asset in real estate. The asset appreciates over time. They improve the operations and make more money. And then they sell it for a multiple of those earnings at a later date. And I went, boom, where has that been? No idea where it had been. And so I instantly decided I'm going to get into the game. And I started investing right away. Like literally, I made an investment with a week of being in that conference. Probably could have learned a little more before then, but it still all worked out really well. I invested within that real estate group that I went to. So I knew the people, I could talk to the people. And since then, I've invested 20 times as a passive investor. And I'm now on the sponsorship side with 11 times. And most of that was last year after I joined up with Massive Capital, but it was just, I had no idea that existed out there and that I could truly be passive. The great Warren Buffett says, if you don't find a way to make money in your sleep, you'll work till you die. I all of a sudden got this thing, okay, I've been working my whole life for my money, going around the Monopoly board, collecting that $200 when I passed go, doing all the things. I was doing it for 55 years before I started investing in real estate. And I went, wow. And then I started to learn, all the tax benefits, all the different things. And it just became just mind-boggling that I could own a part of a major piece of property and someone else would do all the work and I would make a big portion of the money.
Yeah, that's definitely a concept that people just don't know. When you talk about multifamily apartment investing, They were like, oh, yeah, but I don't want to deal with that.
Yeah.
And I go, wait a minute. Let's talk about this thing called passive investing.
Yeah.
And the most important thing that I think about, Trevor, when we first started passively investing in multifamily is the trust
Yes.
of the general partnership team and the operations team that's actually operating and improving this asset. So that's the most important thing to me. And did I know all the answers when we first started passively investing? The answer is no.
Yeah.
I didn't, but I felt like I trusted the people enough that I was investing with the general partnership team that it was okay if I didn't know all the answers.
That's right. And I've definitely learned that over my time. The who you give your money to is the most important thing, right? A good sponsor can make a bad deal better, and a bad sponsor can make a good deal bad. And just by the way they do. And so what you're going to want to do is learn about people. You're going to want to find out about them. You're going to want to follow them for a little while. Do they offer ways for you to learn? Do they take your questions, or do they say, well, that's a dumb question? I mean, there are no dumb questions, right? There's only dumb answers. Are they willing to help you get educated in the space so that you feel comfortable? I'm not going to lie. That first time I did that $100,000 deposit was my first investment. I wired $100,000, and I was like laying there with my eyes open going, did I do the right thing? And yes, I did. And then one other thing I want to make sure that the audience hears is real estate is not a get rich quick situation. Real estate is a long-term game. And I want to talk a little bit about compounding your money, because I started late and I want people to start early. And I'm going to use $100,000 just because it makes the math easy. And I know that's a lot of money, but the basic concept is you want to double your money every 5 years. So if you think about this, put 100 in, 5 years later, it's 2. Reinvest the whole 2, it's 4, it's 8, it's 1.6 million, it's 3.2 million in 25 years. A lot of assumptions, no taxes, always double your money, always put it in. But who would not have a life-changing financial freedom moment from one investment turning into $3.2 million? It is staggering, the power. And people don't get that, right? People don't get that. And often even on the active side, people think, well, I just want to earn enough. But this power of compounding your money, letting your money grow in real estate is super powerful.
Yeah. So let's take that a step further, Trevor. So we think about it the exact same way. But what if you invest $100,000 every year?
Oh yeah, no. I'm just trying to make it simple. One,
Yes.
yeah, no, they can be life changing. It can be life changing. And there's one other thing too that I like to talk to people about, because I know you talk a little bit about diversification on your show here, and you talk about things. It's very important to have some of that in your investment strategy. So, for example, sometimes when I'm investing in real estate, look at it as a baseball game. I am quite happy to get a couple of singles and doubles. Okay, so that's an investment. I have a retail investment. I have a medical investment. They're guaranteed triple net leases. They're not producing the big, sexy, double your money returns, but they're producing consistent cash flow on a regular basis. They're producing consistent growth. They're still giving the tax advantages and all the different things. And the goal is that you want to have a little bit of diversification in the risk. You want to have a little bit of diversification in the geography. You don't want to have all your investments in one city just in case there's something, or in one asset class. So I'm in retail, multifamily, land development, new build storage, and a medical center. And again, now with my large number of investments, it's a little bit easier. And then you want to do a couple investments that are the home run, and they're often referred to as the value add multifamily space. I had my home run once. I did an investment in 20 months. They tripled my money. It's not normal. It was just everything was right? They bought at the right price at the right time. They sold at the right time before interest rates started going up. Lots of things. So I got lucky along with them. But it can be super powerful. But you want a little bit of that mix once you start doing a few more investors. And the next thing is, we all look good on the internet, right? I look good on the internet. I try to look good. I don't post, but look for people that are genuine and people that are trying to add value, people that are trying to connect with you to find out what your needs are, and then say, well, I have an investment that fits your needs or doesn't fit your needs. The same person that I did that big investment with and it went well, I actually went to a webinar where they talked about a deal that didn't go well and their lessons learned. And I thought, somebody called me up. They said, why in the world would they just say that? And I said, oh, the opposite effect for me. I'm so thankful they did, because
It
these
shows
are
that they're
businesses.
human.
Things go wrong. These are businesses. Things go wrong. You
Yes.
miscalculate, you misestimate. And I would rather give my money to somebody who was honest about it, how that they made the deal end up not being what it could have been, and the lessons they learned. And they've been applying those lessons ever since. And it's super important for you to just, look for people that are genuine and honest.
Absolutely. Absolutely. So let's get back to the diversification. So there's, and I'm going to put quote unquote, there's a lot of experts out there that say, hey, you know what? When you first start investing in passive deals, stick with one asset class. Stick with multifamily, learn multifamily, then maybe move on to, triple net or self-storage. So I'm one of the mind where, hey, if somebody is an expert in self-storage or in triple net, I feel comfortable in diversifying my portfolio. Now, if I was a general partner and I was asked to lead something that I wasn't an expert about, such as triple net or self-storage, I would definitely turn that down, or I'd surround myself with a team of experts that knew how to run it. So what's your perspective on that with, diversifying across different asset classes?
So you have to have some sort of a plan. So I'll give you an example. Remember, the who is most important first. I connected with somebody. I went to all of their webinars, all of their things, really loved the value that they did. I'm Texas-based. I wanted to get an investment in the Carolinas, and I wanted to get an investment in storage because I hadn't done any storage yet. And so what happened was this person, I went to her webinars and they presented some development deals, some multifamily deals, and they had some local partners in this Charlotte area. I actually met them at one of the conferences and got to know them. They were a speaker. And then all of a sudden, people I knew, liked, and trust offered a storage deal in a market that I wanted to be in. And I was like, it's a sign. Now the jury's still out. They just now finished the construction and they're building it up. I still think I made a good choice, but you want to make sure that you're looking right. And again, I've been investing in what I refer to as business and landlord friendly type states, all the growth areas, all the things. So again, I wanted an investment in the Carolinas because I know it's a big growth market. I know Charlotte a little bit because my brother lives there, so I've been there many times. Before I used to work for iFly Under Skydiving in Oakland, Wide Concord, just outside. So I knew the area well, and I knew it was super growing. I knew it was super affluent. And that's the market where a lot of people are growing to, where storage is super valuable, right? They got junk they want to put it in. Americans and other people that pay people to store their junk. It's quite interesting, but I wanted, and so again, I didn't just say, I'm going to do storage. The first storage deal that pops into my inbox is my next investment, right? It started out with the who, then the where, then the what. And I looked at the deal, and I looked at the way the deal was structured. And again, that sometimes it's hard to look at how deals are structured when you're first starting out, but I look for structures that are a win-win. So investors get paid first on a preferred return. And then I actually don't mind what's called the waterfall at the end, where the sponsor makes more money if they do well. I want them to do well, because if they do well, I do well. And a lot of people don't like those, or they're fooled by high preferred returns that will never get paid out. And then the sponsor never makes any money. So there's this balance of what they're offering. And this one, again, was when we double your money, it goes to a 50-50 split. And I'm like, double my money, maybe double my money. And now it's a little longer term. It's a 7-year deal because it was a new build. But it's still, so again, look for things that align with first the who, then the where, then the what.
Absolutely. And I think for us, it's really the who is number one. And I think it's your number one as well. So how long, I've often been asked, well, how long does it take to know, like, and trust somebody? Like, is it
So it
4
can be
meetings? Is
very
it 5
different.
touches?
Yeah.
What is it? And I actually write about this in Rewire 2, which is coming out on in early March of 2024. And one of the questions that I put in the book is, how long does it take to get to know and feel comfortable with wiring somebody $100,000? So what's your thought on that?
So it's kind of simple to me. It's kind of like when you meet somebody and there's just that instant synergy. Like they're answering the questions, their values are the same as yours. Their things that they're saying are things that you also believe in. They're not just talking about give me money and I'm going to make you money. They're talking about making communities better. They're talking about doing things that are important to you. There's a lot of things. And again, this, I look at it kind of like dating, right? You meet all these people, but when you go meet 20 girls, there's maybe only one or two that kind of stand out and go, I'd like to get to know her. I'm not doing it now. My wife can let me. But that concept, right? You kind of, when you meet somebody, but take the time, right? Watch them in different environments. Watch them as how they answer other people. When I was hiring people, I would often take them to dinner and find out how they talk to the wait staff. You
Yep.
want to make sure those types of things. So again, you want to get that good feeling about them and the fact that you feel comfortable with them, you can connect with them because you are going to be in a 5-year relationship with them. Now,
Yep.
are there some smooth talkers that can woo you into, and have I invested with some of them? I have. Luckily, at
Well,
the end of the day, it came out okay, but I know I would never invest with them again. They always took my phone call before they got my money and took forever to answer my phone call after they got my money. So sometimes you can ask people, if you're at a webinar and I'm presenting or somebody else presenting and you have a friend there, say, what do you know about Trevor? What do you know about Jacqueline? And you can find out that way.
Yeah. Yeah. That's a really good point. So have you ever had an investment go wrong? Have you
Yeah,
ever lost your
I have.
money or not doubled your money or not received what you
Yeah,
thought you were
so
going to
so
receive?
last year was a tough year. So I had one investment that did not have enough insurance, had a fire, and ended up not being able to recover, and it was total loss of passive investors. And I had another property that was, I believe, mismanaged, but they really struggled. And then they didn't have enough cap rate on their insurance. They had a bridge loan that was expiring.
the
They started getting behind and they never got up and they got repossessed. We're seeing them in the news more often now.
Yeah.
Um, and of course, who would have thought 3 years ago that fixed rate debt would be so important? Nobody ever predicted that interest rates would go from 3% to 7.5%, right? Nobody in months. Nobody. So it was definitely a phenomenon that, readjusted the market that nobody's ever seen before. Hopefully we never see again.
Yeah.
But things like fixed rate debt become much more important. Reserves become much more important. How much do they have in reserves? Become, just because again, if things go wrong, they need that money.
Yep. Yep. So an important GP team, our general partnership team, would think about those risks, the what ifs.
Yeah.
What if my interest rate doubled? What if this cap rate insurance that I have is not enough?
And I'm
Or
not
this
even sure
insurance.
anybody thought that what if. Okay, because this was a pretty weird what if, right? This was like not normal. I mean, 5 years ago, did we say what if COVID came? Did we ever say what if we had an infectious pandemic that was worldwide? I mean,
Well, that's
nobody
true.
would have,
That's true.
right? So sometimes they happen. And again, this is real estate investing. It's typically one of the greatest, safest places. Now, did the stock market crash? Lots of other things had issues. It's come back now. But, just things like fixed rate debt have become way more important to me than it was before, because everybody was buying on bridge loans with flexible rates, and just wasn't a thing.
Yep. So losing on those two investments, did it scare you to continue to invest?
No, I still believe in the concept of it. And I still believe, and again, because again, if you're in 31 deals and you have two that have had issues, and you've had 10 that have given back the estimated returns, and 3 that have almost tripled the estimated returns, at the end of the day, I'm still pretty even. Now, it would be very sad if it was my one and only investment. That might scary enough not to.
Yeah.
But I just don't think people should.
Yeah. Well, you always hear, so, obviously I go to a lot of events like you do. And the one thing that these millionaires and billionaires are saying, like at the family office level, like the family office club, are saying, oh my gosh, when I first started doing this, I made millions of mistakes.
Yeah.
And I think you need to just kind of go through the process and go through that cycle of learning, again, not being afraid to jump in, not knowing all the answers, and really just, some of it is just, you just need to experience the downfall,
Yeah,
or
I
the
agree.
mistake that was made, right? To learn from it and get better and better. And I'm of the same mind that, hey, jump in and do it. Is everything going to be perfect? No, it won't. And it won't be. Nothing, no one deal is ever perfect. There's risks associated with everything. So just understand and make sure that you can tolerate that risk, based on the investment that you're making. And if you
That's
can
right. And
tolerate
everything
it,
does have risk. Again, real estate has always traditionally gone up in value. There's always consistent things. It is the most tax favorable place to invest. I mean, even if you think about it, Russia invaded Ukraine and the stock market went way down. How do you adjust for that risk, right? Now,
right.
it's gone back up, but how do you adjust for it, right? When you are investing your money, you have to go with the flow. But again, who you give your money to, I can't say it enough times, is the best.
80-20, right?
Yep.
80% who you're investing with, 20% on the numbers. So
Yep.
for all you investors out there that are thinking about doing that first passive deal with somebody, make sure that you know, like, and trust, and know a little bit about the numbers, and then you should be fine. As long
Well,
as
I
you
mean,
trust.
80%, you spend time investigating them too, right? And I watched a dozen deals from people before I invested in them. I went to their webinars. I looked at the questions. I looked at how they answered the questions. I was very eager to learn. And so I went through a lot, and, I wanted to see how did they answer the questions. It's very important.
Yeah. And also another thing I think just to know is, if I don't know the answer, I let my investor know.
Yeah.
Oh, you know what? That's a good question. I don't really know that answer, but let me get back to you. So don't be afraid to say, hey, you know what? That's a great question. And I really don't know the answer. Because I think people will view you as human.
Yeah.
I'm not the expert. I don't know everything, right? We've been in this for a certain number of years, but I don't know everything, right?
No.
About multifamily or self-storage or triple net or whatever it is. So we're human, just like our investors, right? Well, this has been a great conversation, Trevor. What's the one thing that you would like to leave the audience with? One thing for them to think about. So
I think starting now, so the best time to plant a tree was 10 years ago. The second best time to plant a tree is today. So if you want to sit in the shade, if you want to build your financial freedom and you didn't start, today is now the best time. And I think that's important, right? That it's super hard to get into the analysis paralysis, or super easy, to get into that and to just let that take over. And at some point, you just have to find the right who and then trust it. And then, and again, I've been doing this almost 5.5 years now, and I learn something every day. So never stop learning.
That's true. That's why I do these podcasts, right? Because I learn from people like you and other experts that I have on the show. And, again, every single day is a learning experience.
Yeah.
So, hey, Trevor, where can the audience find you if they want to talk more about your journey or about some of the things that you're doing?
So the easiest place is LinkedIn. You just got to remember the K Trevor Thompson. Just send me a friend request with a message saying I saw you on the podcast, and always accept meetings, always happy to do a one-on-one. My goal is to help 1,000 people reach financial independence through real estate investing. And, so they may invest with me, they may not invest with me, but my mission is that they feel comfortable about doing this and they invest with their who. That's the most important thing to me.
Fantastic. And what a great way to end the podcast, Trevor. So I appreciate your time. And viewers, please reach out to Trevor. He's an amazing resource. And I wanted to thank you for being on the show.
Thank you. It was an honor. I enjoyed it.
Fantastic. Have a great day.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.